Hello guys, welcome to the Nailing FX and Crypto session. My name is Becky. My email address is here. It's becky@traddictiv.com. There's also support@traddictiv.com, so you can email either one of those if you need help with anything. I'm just going to put the disclaimers up on the top left hand corner, so by all means read those so that you can know what to expect from these kind of videos. Essentially they are demonstrations. It's ultimately up to you what you do with your trading. Now, nailing FX and crypto obviously means we are looking at FX, Forex, foreign exchange and cryptocurrencies. We tend to mainly focus on Forex, to be honest, just because that's a bigger market, slightly less risky than the crypto market, more regulated, things like that. But of course, happy to look at any cryptos if you guys want me to. I'm going to keep my eye on the chat boxes. In fact, let me just make sure I've got them open. I'm going to keep my eye on the chat boxes, so for you guys that do have questions as you're watching live, by all means let me know, and then I can of course go and look at certain markets you want me to look at, or I can answer any questions that you have. So please do let me know and I'll keep my eye on the chat boxes for that. Now, just to explain very briefly what we're going to be going over today. So we'll go through the current market environment, trade review, so we'll look at closed trades, trade management and trade execution, so looking at new opportunities as well. Now, we are currently streaming in many different places. Most of them are free places that we're going to be streaming in. What we usually do, because people are also joining us in our closed coaching community, is after we find at least one trading opportunity, we'll cut the stream to the free places and continue in the closed coaching community. So those that are watching for free still understand the methodology, you still understand how we place a trade, why we place a trade, and you get at least one example. And those that are in the closed coaching community essentially just have access to more of our time in that closed environment. So that's what will happen. Okay, so just first things first, just need to remind you guys of this link, which is tradewithufos.com/Becky. From here, you can get yourself a free Trade with UFOs membership by filling in the details at the top and clicking through the steps. Once you've done that, you can come down and ask a question here, which is in a public setting. What that then means is that I can answer the question in a public setting and we can all learn from this environment. So ideally, that's where you'd go to post questions. You can email me. I'm always happy to respond to emails as well, but the ones that are in public are better. So what we'll start with is let's go to the chart, and we'll start with looking at trades that we put on last time and what happened. So I'm just going to get up my little list so I remember which ones that we looked at. So the last one that we looked at in the closed coaching was the US dollar versus the Singapore dollar. This was placed on the 15th of September and it triggered on the 16th. On the day that it triggered, just to show you here, we still had a thick red dot, so probability downwards. For those that don't know, I will summarize very quickly. This app here is what we call our auto climate app. If it's got a thick blue dot, that tells us probability is upwards, so we look to buy. If it's a thick red dot, that tells us probability is downwards, so we look to sell. And if it's a thin dot of either colour, we basically ignore it because that means not enough probability either way, and we change to a different opportunity. So on the day that it triggered, we still had probability downwards. So we still would have placed the trade. We still had the EMA within our UFO as well. For those of you that, again, very new to this, I know I might be using terminology that you might not know. Don't worry, I will explain it as we find an opportunity and hopefully place a trade today. So for those of you that do follow and you know what I mean, we would have still taken these trades because everything was still lining up. Now, saying that, obviously this went through. It took a little bit of time, but it went through and it stopped us out on the 17th. Now, by the time it stopped us out, we would have had a change in climate. So we would have had that thin dot there that would have appeared on the 17th. So if you had been watching this strictly, and let's say you'd got up and you'd looked at this earlier on in the morning, this is UK time, then perhaps you would have closed the trade here. So not a full loss, but a slight loss. And you would have closed it because we no longer had probability down. So you don't want to be selling when probability is down. And this was a short trade that we put on, excuse me. So you may have closed it for a partial loss, or if you'd have left it or not known or not realised or not looked at it till later in the day, then it would have been a full stop out, so a full loss on this trade. And no worries, that happens. We know that we have losers in the markets, no big deal. So it was the dollar Singaporean, and we also looked at the Aussie US dollar. I think the same time frames, yep. So daily on the left hand side. Oh, we looked at it on Oanda data, there we go. So we had daily on the left hand side and 55-minute on the right hand side. So here we had, unfortunately, look how close this was. We placed this trade on the 15th, and later on the 15th, when we still had, perhaps just the EMA was still with us, we still had a thick red dot, we still would have had everything lining up. We just missed this trade, which is such a shame. I hate it when that happens, but our entry was here at this black line, 0.7349, and we missed entry. The high of this candle was 0.73479, so we missed the trade by 1.1 pip. We would have unfortunately missed this move to the downside, where we would have been capitalizing on a decent move. But hey, again, it happens. It's a shame when that happens, because we were right, we were just not exact enough, or we missed it by just a tiny amount. But hey, again, it happens. Missed trade on that one, unfortunately. Then we had a look at the Euro Aussie. In fact, what I'll do, because the Euro Aussie is different time frames, so I'll stick with the Canadian Swiss for now. So we had a Canadian Swiss trade. This was a short trade, and this one would have been either, depending on how strict you were to be looking at this. Oh no, sorry, this one, I was looking at the wrong dates. Yeah, this one was just a straight stop out. So this one, our entry was the black line. Our stop was the red line. In fact, if we go down to a smaller time frame, it may have been that price came in, came back out, hit our safety target, and then went against us. So let's have a quick look. Let's just go to a 20 minutes, see what happened there on a smaller time frame. We might get a better idea of exactly how that happened on the 15th. That was the 20th. I'm on a smaller time frame, of course. I need to go back further. So yeah, looks like that just went straight through. Yeah, that just went straight through. So that was an overall loss on this trade. But hey, again, we take losers, that's fine. What's frustrating sometimes is we miss that other trade by 1 pip. 1.1 pips, and that would have more than taken into account the losses, and would have put us overall at a profit from the last session's trades that we put on. But again, is what it is. It happens sometimes. We have to keep plodding on. So we are now looking at the Euro Aussie. Euro Aussie was a long, and depending on how strict you are, how often you look at this one was using different time frames, bigger time frames. So depending on how often you check in, depending on how strict you are, depends on whether or not you either cancelled this trade or it's so far at a profit. So at the time, we placed it on the 15th of September, and when we did that, we had a thick blue dot. We had the EMA within our UFO. Great. Now, by the time it's come back in, and it came back in here on the 27th of September, that's when it came back in and hit our entry, and has since moved away, and it's gone to be in profit if we were to be in this trade. And by this time, yeah, great, we still have a thick blue dot. We still have probability upwards, but we no longer have the EMA on our side. So again, depending on how strict you are, depending on how often you checked in on this, you either are in the trade at a slight profit, or you cancelled the trade and you didn't get into it because you didn't have the EMA on your side. So again, depends how strict you are. So those are the 4 trades that we placed last time. So let's now have a look at new opportunities and see what we can be looking at. What we're going to do is we're going to use 3 different platforms. Not because I want to confuse you, but because each of you will be using different platforms. The more different ones I use, the more likely most of you are to be able to at least see and understand what I'm doing. But before we get onto the platforms, we're going to come to FX Street's economic calendar, and we're going to filter by most of the markets that we trade in terms of their currencies. There we go. And we're going to filter by high impact trades, or high impact news events, sorry. And we're going to have a look for the next week or so, because we tend to swing trade these markets, remember. Doesn't have to be, but in general, swing trading, I feel from what I've learned, my experience, swing or position trading is much better in Forex and cryptos than trying to day trade these markets. But again, there may be some that do well day trade. So we need to be aware then that today, this is based on Eastern time, GMT -4, so Eastern time. that we have news on the US dollar and news on the euro coming out today. So we may want to avoid, for example, the euro versus the US dollar, just because we are likely to see some movement on either one of them, actually both of them. And if we see some volatility on those markets, those could be the positions where we were right, but a bit of extra volatility meant we got stopped out, and we want to avoid that if we can. Early tomorrow morning, we've got news on the pound and the Japanese yen. Later on in the morning, the US dollar, Japanese yen again in the afternoon or in the evening, US time. And then on Friday, we've got some news early in the morning on the euro and again on the US dollar. So I would say the US dollar is featuring every day where we're seeing news that could affect it. We're also seeing the euro perhaps being impacted a few times. And then, okay, we've got the yen and the pound. Now, we're not necessarily going to avoid all of them. I will just try to make sure we don't have euro versus US dollar pairs, because if they're both seeing volatility, then we might, like I said, be right on our direction, but unfortunately get stopped out based on volatility. So we'll try and avoid that if we can. So what I'm going to start with is TradeStation, because I'm going to use the scans on TradeStation to see where we might have probability. Now, very interestingly, I was going to say we will start with the majors so that we can then go to MetaTrader 5. That's where I had the majors sort of lined up ready to go. And I was going to come to here and see where we had probabilities, but notice what we want, all of these on the left-hand side, by the way, are majors. So major currencies versus the US dollar. And we've got them on 60-minute climates, 240-minute climates, and daily climates. Now, what we're looking for in these scans is firstly that we see a yellow box. None of these are yellow, which means none of them have opportunities that align with our methodology that are close to us. That's what the yellow box tells us, is that it's close to current price, it's likely to trigger soon. So unfortunately, we are out of choices here on the majors, but what we will do, especially on the smaller time frames, things can change quickly. So we'll start with the cross pairs or the minors, and then we'll come back and hopefully see that we have probability here on the US dollar. So with or US dollar pairs, sorry. So with these ones on the right hand side, we have 240-minute climates and we have daily climates. And what we can see is that we've got some that have yellow boxes. So these are where we have close opportunities. Now, some of these yellow boxes say sensible, some of them say hopeful. To be fair, all of these yellow boxes say sensible, so that's great. We'll look at these. And you'll also notice that here, some have grey boxes, some have red boxes, and some have blue boxes. We want to eliminate the grey boxes so that we are just left with probabilities either up or down respectively, which is what the blue and red boxes show us. So by eliminating these, we can see that across different time frames we have 2 probabilities here and we have 4 probabilities on the bigger time frames. So what we'll do is we'll take the bigger time frames first, just because again for me Forex swing position trading is better, so that's what we'll do first. So we'll look at the Aussie Swiss, the Aussie yen, the Canadian Swiss and the Euro yen, and then hopefully we'll come back and see if we have any probabilities here on the dollar pairs. So let's go to TradingView to have a look at these cross pair opportunities. So first one was Aussie Swiss. So Aussie Swiss, here we go, Aussie Swiss with a daily chart on the left hand side and a would be a 55-minute chart on the right hand side. I'm also just going to make sure that we're looking at Oanda data, because then we are looking at the exact data that TradeStation is looking at as well. Okay, so brilliant, we have an opportunity. First one we've looked at and we have a decent opportunity. So let me explain to you why. And based on the time, we may even get a second trade in, hopefully before we then cut off the stream to the free places. So with the Aussie Swiss, we have lots of things going in our favour actually to the downside. We have a thick red dot that tells us probability is to the downside. We have usually this market going down for 6 candles. That's what that tells us. We're on candle number 1. So we actually have probability based on what usually happens that it continues there to the downside. We also have sell UFO close to us. So we have sell orders. That's what that red UFO is, showing us where sell orders are. those sell orders are between 0.6720 and 0.6747. And we have the EMA value in between that. So the EMA value is 0.6727, which is around about here, nicely within our sell UFO. So what we're saying is that we have probability to the downside from the climate, probability that price is pushing down, probability downwards. We have sellers just above us, and at the EMA price we will also have sellers. So we've got sellers, sellers and sellers that are all pushing price down for different reasons, which gives us greater probability that price goes down. So we're going to use this UFO here, and that will be the first trade that we put on. I'm going to open the control panel because that makes it easier for us to do our maths. And hopefully we won't... Oh, we might just have to not put this trade on, but let's see. So I'm just going to use this. I know it's a fib retracement, and I know those of you that use fibs are not going to like that I don't use them in the way that they're intended, but I use them as a drawing tool personally. So 48 plus 2 takes us to 50, plus 5, so 55. So what I've done here is I've double clicked on this so I can open up the coordinates, and I've just used this bottom number and rounded it down to the closest pip to give us our entry. And I've used this top number, I've rounded it up to the closest pip, then I've added a couple of pips for the spread, then I've added 5 pips for wiggle room. So that's given us 7 pips or so, a bit of wiggle room there based on spread and wiggle. Now what I'm just eyeballing here is if we just do, that's cool. So what we would usually do, and this is what we will do today, our final target, meaning the place where we're going to get out, if we're right for a profit, is going to be if we're selling. Well then if we've got sellers pushing down, the only thing that can stop sellers are buyers pushing up. So we've got a UFO here, which is a green UFO. That shows us where buy orders are. That starts at 0.6676, and I'm going to round it up by a couple of pips there. So I'm going to round it up to 0.6678. That's going to be our final target. Now, if that's closer than 1 to 1 away, it's not good enough for us. We wouldn't take that trade. It's just, by the looks of it, just within or just over a 1 to 1 trade, and therefore just about worth taking. So if we're right on this one, we're not going to make very much, but that's okay. We're still, if we're right, we're still going to make a little bit of profit. If we're wrong, we'll lose what we're happy to lose. Now I assume a total risk of $100. We place 2 targets, so $50 risk on one, $50 risk on another. I use TradingView because it's so easy to figure these numbers out. Oh no, hold on. This one we're going to put in this final target, 0.6678. So see, that's a 1.2 to 1. So just over a 1 to 1. So that's why we'll place that trade, and we'll click sell. So we've got that in, and our safety target is always 1 to 1 away exactly, to give us a little bit of room so that if we are right by a little bit, but not fully right, we don't lose basically. So that number is 0.6685. So that's our second target. So that's the first trade that we put on today. So we've got a short on the Australian dollar versus the Swiss franc. We're using Oanda data, and we are using a daily chart on the left hand side, 55-minute chart on the right hand side. This was placed on the 29th of September in the live session. As in the free sessions. So with this, we put it on because we had probability down, plus sell orders, plus the EMA. We still had a little bit of room for us to take this to more than a 1 to 1 trade, so we'll place that. So that's our first trade. Now what I'm going to try and do very quick before we cut the stream, I was going to see if we had any probabilities here on the majors, but I tell you what we'll do. Let's go to MT5 anyway. Oh man, I customized this earlier and it seems to have forgotten. So let me see if I can open that. Okay, that's a shame. So excuse the colors. Let me just very quickly, she says, there we go. I'm just gonna very quickly customize this. I did it earlier, but it seems to have not remembered that for a reason. So let me just change all of the colors and things. so that it all makes sense. Red. Just want to make sure we have as many sort of similarities, so it's not as it's easy to know what's going on. I will not show the grid. Great. Let's make this one a little bit bigger as well so we can see what's going on here. We need to add a couple of indicators. So I'm on MT5 and I'm just going to the insert indicators custom. Thing at the top there is auto climate, so we're going to add auto climate to the left hand side. To the right hand side we're going to add the UFOs. So insert indicators custom UFOs and OK. And we're also on the left hand side we're going to add in an EMA. So I'm going to come to trend. Go to moving averages or moving average. I've chosen the exponential one here. It's a 9 period, that's what we use. And so now we have everything hopefully in place to see what we need to see for potential trades. Now what we're going to do is we're going to put a weekly on the left hand side and we're going to put a 4 hour on the right hand side. Now this is because we would normally with a weekly use a 144-minute chart, but we can't get that on MT5, so we just use the closest thing we can, which in this case is a 4-hour chart. So what we're going to look at here is if we have any opportunities on bigger time frames. Now the reason I'm looking at this for bigger time frames, or on bigger time frames, is because if we come back to TradeStation, we know we have none for our majors on daily 240 or 60-minute climates. So that's why I would rather use MetaTrader to look for bigger time frames and see if we have any probabilities there. So the EMA value, if we look at this today, so the EMA is 1.176. 1.176. So do we have, oh, I know what I need to do. I just need to make sure that we see common chart shift. There we go, so that way we can see it. So it was 1.176. 1.176. So we do have a UFO here. See here, we have a red UFO in the context of a downwards climate that coincides with the EMA value. The EMA value is 1.176, so almost exactly where this starts. Now, as price moves up, the EMA value is also likely to move up. So it may move outside of this UFO. But for the time being, it's close enough, it's lower down enough on the UFO that we would be likely to see a little bit of movement. So this is also to show you here on MT5 that it's the same thing. We've looked at TradeStation, we've looked at, or to be fair, we haven't looked at a chart on TradeStation, but we've looked at charts on TradingView and on MT5, and it looks the same. We've got our auto climate on the bottom here on the bigger time frame. We've got our UFOs on the smaller time frame, tells us where the prices are. It's just that one of them's on the side of the chart, one of them's on the chart. One of them, the lines go straight across, the other one, the lines start at a point in price. But it gives you the same numbers and it's doing the same thing. We're doing the same strategy. So we had, like I said, auto climate is down. Our EMA value is within this UFO. So we will go and check that out on TradingView so we can place the trade, just because it's easier to place the trade there on TradingView. So this is the euro versus the US dollar. It'll be Oanda again. Weekly on the left. It was a 240 on the right. This was euro US dollar, and hopefully those same prices. Yeah, there you go, brilliant. So this is the trade that we'd be placing. In fact, this works quite nicely because so the entry price is going to be 1.1767. The stop loss price is going to be 1.1797. The UFOs just disappeared for a sec, but there they are. And see how the EMA is actually slightly out of it, which is great, because then if price comes up, the EMA comes up, but it's not got to come up too far to fit into our UFO. So that actually works really nicely. Our final target's all the way down here at 1.1425, because we're going to round it up to 2.3 and add a couple of pips, and our safety target's going to be 1 to 1 away. So let's put this trade on. Okay, that's 7. That target is 14.25, $50 risk. So that's one of them, and then the next one is going to be the safety target, 1767. It may be that we miss this trade, right? It may be that it never comes back up here, or it doesn't come back for a long time, and by then things have changed. No problem. We will just cancel the trade if that's the case. So our second target here was at 1.1737. So that's our second trade. So we've now placed 2 trades on the free channels, and we will continue in the closed coaching, maybe look for one more trade before we round off. So I'm just going to put that there, placed 29th September, live again. So I know it's in the live or the free streaming sessions. So next time we will come back and of course have a look at what happened to these trades. We're going to place some more trades in the closed coaching if we can, seeing if we have any opportunities. If we've got dollar trades, then we will come and look at MetaTrader. If we've got cross pairs, then we will look at the cross pairs. Sorry, if we're looking at cross pairs, we will look at TradingView. Now, I've literally just remembered that at the start of this session, we said we might avoid the euro versus the US dollar. Now, the good thing is we're using bigger time frames. So the bigger the time frames, the less of a problem it is if we have news coming out in a particular day or even over a couple of days, because we're using a weekly time frame to make our decision here, and we're using a 4-hour chart, which means it's bigger. We've got more room that can happen. In fact, volatility might push price up quickly and get us into this trade quicker in this case. So I know we said that we would avoid the euro versus the US dollar based on the news that's coming out on it that may affect it. Because price is relatively far away, 100 pips or so, more than that, from our entry, and because we're using bigger time frames, that negates some of that risk. If you are more conservative and you'd rather keep away from the euro US dollar completely, then I get that. I kind of suggested it myself anyway at the start of the session, so in which case you wouldn't even place this trade. You might wait until that news has come out, reevaluate, see where you're at then, and then perhaps replace it if everything still looks good after those news reports have come out and after that volatility has already happened. Okay, so for those of you watching in the free arenas, if you have any questions, go to tradewithufos.com/Becky. Get yourself a free Trade with UFOs membership at the start or at the top there. You can then scroll down, ask questions in this public space, which is great because it means I can answer them there and it's helpful for everybody. For those of you in the closed coaching, let me just check and say hi guys. I'm just going to cut the stream to the free one, so I'll be with you guys in a minute. For those of you watching free, thank you for joining me. Hopefully this video was helpful. You've got a couple of examples of trades that we've put on. Any questions, let me know, and I'll see you next time. Take care. Bye-bye.